Hello traders, Gary Wagner here. Just before 10:30 in Honolulu, 4:30 in New York. It's Wednesday, June the 8th, 2016, and we are looking at the Dow Jones Industrial Average, not only trading over 18,000 like yesterday, but closing above 18,000. Dow Jones Industrial Average closing at 18,005. This is the first close above 18,000, I believe, since April, the second occurrence of this particular price point this year. Standard & Poor's 500 also trading nicely higher, up almost 8 points on the day at 2118. We are just shy of the elusive record highs. I believe they're around 2130 in the Standard & Poor's standard contract. E-mini, I think they're around 23 or 24. We'll have to take a look at it when we take a look at our first charts. But we had a dynamic day today. Low on the day, 2106. High, 2119.75. Let's take a look at our first chart. And so traders, the first chart that I do want to take a look at is the Dow Jones Industrial Average, trading and closing above 18,000, really for the first time since right in here, which occurred, March to the beginning of April of this year. At that point, we saw the market track below 17,400, only to really move and close above that price point today. Now, we're certainly not at record highs, historical highs, nor a yearly high, but we're quickly approaching that. If we find the market, find support at this particular area, the next real price point you want to look at in terms of the Dow is between 18,150 and 18,200. So traders, we had interesting action not only in the Standard & Poor's, but also in the dollar and oil. Oil moving up past $51 today, a sizable move to the upside, but more importantly to me, not finding resistance at $50. That was a positive factor for the equities markets as we see them tracking higher. As you can see, our next price point I really want to see if we can take out is 2117. And the reason for that, I've got to really move the chart and compress it quite a bit and actually go into last year's activity, because at this point, the highest that we have seen throughout the year in the S&Ps, we have now taken them out, because this was our most recent high that we had in the S&P. Now, then we really need to start looking at what happened last year. We have a series of tops, and these tops, of course, occurred in June and July, then in end of July, almost beginning of August of last year, in which we had the market trading at this particular price point. Our record high comes in right here at about 2130, roughly in that area. And so we now have the opportunity, as I have believed for the better part of the last couple of months, that we would certainly see this market track and possibly even trade to new record highs. Of course, we didn't take a stab at this market until it broke above these former highs. As I said, I wanted to buy either at 2080 or on a breakout. And the day that we were looking at that, we did have some lows. That's right in here. And I think the low that we hit was 2083. So we couldn't effectively hit that trigger, and in fact then bought right in this area here. We are long, of course, S&P's at 2110. Market is currently trading at 2117.50 to 2118. In that area, as I said on our gold report, let's see if this market can have some good follow through tomorrow. And I want to see some effective closes above this particular price point. And at that point, I will really be looking for a test of these record and all-time highs in the market. So traders, some of the outside markets that definitely have influenced gold as well as U.S. equities is the U.S. dollar and oil. We're looking at a daily chart. You can see that we certainly saw the dollar fall today. Not a tremendous drop. That's this red candle right here. Not a tremendous drop, but about a 0.2% drop, 93.61. That's the current price that we're tracking at. And my sense is that we could see a further decline in the dollar, as the belief right now is that there will probably not be a rate hike from this current FOMC meeting. However, traders, I caution anything is possible with the Fed, because we've seen this market virtually go through a roller coaster ride as we anticipate whether or not they're going to raise rates. And the real question should be when they'll raise rates, because we're going to see, I believe, one more, not so much two more, but at least one more rate hike this year. And then traders, lastly, I do want to look at crude oil. We looked at this chart yesterday, and I talked about the fact that we have these cascading upward channel lines that we have seen this market really track effectively in. Now, today's trading activity took crude oil prices to a closing price of $51.54. But what I really find interesting is when we look at this market, what we can see in this channel line is the fact that we have now on a intraday or the high basis have hit the top of this channel line. So even if it does continue to rise, I would look for it to move back a little bit and to continue to trade along this channel line. But we certainly could see some resistance even in a bullish scenario in crude oil. Again, I'm still looking at this market effectively finding some sort of resistance here, but I can tell you this, traders, we have an effective close above this most recent high that occurred in October of last year. Maintain your current long position in the Standard & Poor's 500 E-mini. Maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.